Most people assume that it is the ratio in between the good bets and the bad bets that they make in the market that defines success for them. They believe the more number of good bets that you have, you make money, and the more number of bad bets you have, you lose money. On the surface, this understanding may appear to be the right one. You make more money when you have successful trades, right? And you lose more money when you have more number of bad trades. On the surface, this may appear to be the right thing to do, but it is not. That is because the concept of capital preservation comes into picture here. Let me explain it to you in simpler terms. Let us say that you start with an initial corpus of 10,000 rupees. This is all the money that you have. You started trading with that money, and the stock that you purchased that day went down by 10%. So your corpus from 10,000 now reduced to 9,000. Now let us take another example. You had the same 10,000 rupees, you bought a stock and it went up by 10%. Your 10,000 now becomes 11,000. Correct. Understood. Now what happens? If you book your losses at 9,000 on the stock that went down, what is the loss that you take? You take a 10% loss. And if you book a profit at 11,000 for the stock which went from 10,000 to 11,000, what is the profit that you take? 10%. But which is the decision that you would take? Would you book losses or would you book profits? You would say profits, but that's not the right answer. The right answer is the losses. The reason behind it is a 10,000 to 9,000 drop or a 10% drop takes 11% for breaking even. That is, you need another stock or the same stock to move up by 11% in order to return you back your corpus of 10,000 rupees. Now let us assume that the 10,000 rupees stock that you bought went down by another 20%. That is, your 10,000 invested now is 8,000 rupees. So what do you think is the amount of up move that is expected out of this stock to break even back to 10,000 rupees? It will be 24%. So now let us assume that the same stock of 10,000 rupees came down to 5,000 rupees. That is, it moved down by 50%. What would be the up move in order to break even? 100% increase in the stock price. Has to double in order to break even. But what happens on the other side of the story? The story where your stock went from 10,000 to 11,000 and you booked profits? You just made 10% profits. This is exactly the single most important mistake that most traders do. They book their profits very quickly, they keep their losses for too long, and that losses accumulate over time and they'll kill out all the corpus that you have, and they mostly break rules. And what rules, right? We don't even have rules. If the stock is moving up, buy the stock. If the stock is going down, sell the stock and then pray to God. That's exactly what happens with most traders. But ask what most successful ones do. The simple difference in between what we do and what they do is that the moment there is a falling stock, they sell out, they exit, and they sit quietly. The moment there is a winning stock, the one which is going up, they sit quietly without selling it. They'll have technical and fundamental indicators to indicate, okay, when is the stock hitting its resistance and when it would come back. But otherwise, they sit quietly and they'll have rules in place. This is all that it needs to be taken care in order to be successful in the trade. You need to run out of your loss-making stocks very quickly. I remember Nicholas Darvas, the man who made a lot of money in the market. He was a trader and he said, whenever I saw a loss-making stock, I was like a thief who was caught in the act. I would book my losses and run out of there. And when it was making success and when it was making good moves for me, I would just wait like a king and keep waiting for it to move up and up. This one small difference in between what you do can take you a long way in financial markets. Can you try and implement this? I hope that this information is something that will change your trading and investing journey. If this helps, please let us know. I'll be waiting for you. And for now, I'll be signing off. Thank you. And this is your Unknown Sailor.